Okay, so welcome back to part D of chapter 20, and we are on page 8. Now, I just wanted to draw your attention back to page 8 before we go to finish off the problem. Here, we had the future value 0. If there was a BPO or a guaranteed residual, they would be the future value. But we didn't have that, so we didn't need to worry about it in this question. As you can imagine, all the questions are different. Okay, so if you're good with that, we're going to leave page 8, go on to page 9, and actually do the problem now that we know it's a capital lease. So, what they want us to do, and I'll leave as much of this up as we can, we are Crane. Amortization schedule for Crane Limited for 2020, 2021, and complete the journal entries. And remember, we're using reversing entries, so I'll talk about that when we get to it. So the first thing we need to do is figure out the balance of the obligation. Now, notice here, remember I said last time in the last example, sometimes they'll put 2 different lines for the same date, and sometimes they'll put them in one. So on the last example, I just had 1. On this example, I have 2. So we'll put the balance in the first, and then we'll do the first payment in the second. So you'll see both of those on Wiley Plus and in practice, so that way you're just kind of used to it. So from our formula, we need to know the amount to capitalize. So from page 3, the amount to capitalize Hi guys. Just said hi to my dogs. They just got home. So the amount to cap, we said it is the present value of the lease payments plus the present value of any amounts guaranteed, and it's usually the residual they're talking about, plus the present value of the BPO, if there is one. And that's the amount. Now, from page 8, we already did that. We calculated it as 81743. So that's going to be the amount that goes to equipment under lease, which is the asset, and lease obligation at inception. And remember, inception just means the beginning of the lease. So if you see that word, don't let it. Okay, so let's fill in our little chart. The balance of the obligation is the 81743, and there's nothing there. So remember, our first payment is 20567. And is there any interest since we're paying it on the very first day? Nope. So it all goes to the obligation, 20567, which means we have 81743 minus 20567, which is 61176. Again, the payment's going to change, but this time there's interest, and you use the same interest that you used when you calculate this. So used 13%, because with ASPE you always pick the lower one, so this is also going to be 13%. So we just take 13% times the last balance, which was 6117, which gives us 7953. Watch some of the questions. Just want you to round to the nearest dollar, and this one said round to 0 decimal places. some want the cents. I will make every effort just to give you to the nearest dollar on the final. Okay, so if we pay this much, and this much goes to interest, well, the rest has to go to the lease obligation. So 20567 minus 7953, 12614. So this is just 61176 minus 2614, and we end up with 48516. And then you'd go on till it got all the way to zero. Notice, unlike our other example, because there's no BPO or amounts guaranteed, there won't be that extra payment at the bottom. So go ahead and do this on Excel and take a look at it. And if you want, just to see how that works out. Okay, so now let's do the entries. And remember, there's reversing entries. I'm mostly saying that for myself. So I left you lots of room on page 10 to do the entries. Go there and do those. So let's do the very first one, January 1st, and they wanted it 2020. And I'm going to combine the entries. So we're shelling out cash, so that's going to be our credit for 20567. We're establishing the asset, equipment under lease, for 81743, and then we're recording the balance of obligation under lease. So this is combining all our first entries together. If that confuses you too much, do it separately and show first the equipment under lease and then the obligation for the same amount, and then split the payment out. Just like we did in the last example. Okay, now it said that Crane is responsible for paying the executory costs. So we're going to record those sometime in 2020. The executory costs. So if you look back on page 9, they talk about that in number 4. So number 4, page 9. So we're going to debit insurance expense for 1,000, debit property tax expense for 1,700, and credit cash for 2,700. Now, finally, we get to the end. So December 31st, 2020. And we need to record interest on the obligation. And we have to record depreciation on the asset. So we're going to debit interest expense for 7,953. Bearing in mind, if it wasn't a full year, if it was 9 months through the year as our year end, then you prorate it for 9/12, like we did in the other example. So we debit interest expense and we credit interest payable. So make a little note to yourself, different than IFRS. Remember, IFRS put it right the obligation. This one I think makes sense to more students, but that's where we are. Then we've got to do depreciation. So debit depreciation expense, credit accumulated depreciation. And here's where we have to start thinking about how much. How many years, and is there a residual we subtract or what? So there is no residual, or it's not guaranteed. So no residual guaranteed. So nothing to subtract. Now, do you think we should use the lease term or the economic life? They're only a year different, but still, do we use the 5 or the 6? Well, is Crane, which is us, are we going to keep the asset longer than the lease? No, it says it's going to revert back into the lease, and that's it. So we're going to use the lease term of 5 years as it reverts back to lessor. So our calculation then is 81743, the cost, in little quotes, you can't see me doing that, of the asset divided by 5. And that's 16,349. Okay, hopefully that made sense. Again, you guys, just let me know. Okay, so that's the first year. Now we go to the next year, and it's January 1st, 2021. Now, what's different about this is they said they're reversing entries. So in case you don't remember reversing entries from 315, which no one ever does when we get to this point, so if you do, good for you. What usually happens is whenever you've accrued an expense and a payable, and you can also do it with revenues, the next year, especially, you see this a lot for accountants when accountants do the books at the end, and then you give it back to them. You do a reversing entry so that the bookkeeper doesn't have to worry about closing off the interest payable. So you're kind of, a reversing entry wants to get rid of this payable. Now, if you do want to review that, it is in 315 in one of the earlier chapters in your textbook, because it works better when there's cash going out later, but it can work the same here. So I'm going to show you the reversing entry. So you just reverse this transaction. So you debit interest payable for 7953 and credit interest expense for 7953. So this closes this off and gives this a negative balance, or credit balance. So that when you go to do the lease payment on January 1st, you don't have to worry about closing off the payable. You debit interest expense for 7953. You debit your obligation, and I'm just following our little amortization chart we made. Obligation under lease, 412,614, and again that's from the amortization table. And we credit cash, 420,567. So just make a little note to yourself here. This would be interest payable if the entry wasn't reversed, the entry hadn't been reversed. Okay, so hopefully that makes sense. That was the end of part D, and I'll make another video for part E. Just keep in mind, this chapter, chapter 20, is another big chapter that's got a lot of moving pieces. You'll be happy to know that chapter 20 is a little bit easier, and chapter 22 is actually a statement of cash flows, and we're using the direct method. So the operating section's different, but the other two sections are the same. Okay, so we'll part E on another video. Bye.